Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about today is Euro CHF, and the reason for which I decided to speak specifically about Euro CHF is because it's definitely time to make an update from the previous analysis that I had performed on this pair, since the market has created both new structure from a daily perspective and we now have also the new COT data both for the Euro and the CHF. So it's definitely time to make an update and show you exactly what kind of opportunities we currently have on this pair. Now, what I will be doing is, as usual, keeping the analysis as educational as possible. So first, we will be speaking about the technical side of the market. I will then go and see what I have both from a Euro and a CHF perspective from a COT data point of view. So commitment of traders, which is what hedge funds are currently doing in the market. And by the end of the video, by using the combination of these two different types of analysis, so order flow to see what the smart money in the market is doing, and technical analysis, we will be able to understand exactly where are the best probabilities for this pair and how we can be looking for an opportunity on it. Now, let's start from the monthly time frame. Now, on the monthly, what do we have? From a monthly perspective, we have a market which has just provided a very strong impulse to the downside. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And by doing this, what we can see? By taking your Fibonacci from the high to the low of the impulse, we can see that the market retraced exactly to the 0.618 of the Fibonacci taken on this monthly impulse. Now, the 0.618 is the golden ratio, which is the level at which most of the times the market does retrace before creating a rejection to the downside. Now, in this case, the 0.618 is in perfect confluence with the previous support to resistance, creating a confluence of resistance inside of this zone, which the market has rejected multiple times and created after testing the last time this very strong impulse to the downside. So on the monthly situation is very clear. We have extremely strong resistance here and the market is about to test it again. Let's go down on the weekly time frame and see what we have from a weekly perspective. Now on the weekly, price action is very clean. We have a market which has created the first rejection of the confluence of resistance that we have identified already from a monthly perspective, and then the market went and retested the same exact level multiple times, creating a lot of rejections. We can see all the rejections that the market has created in testing that confluence of resistance on the monthly. We can see this clearly reflected on the weekly, and the market also shifted from creating higher highs to creating lower highs before the drop to the downside. And now we can see that the market is about to test again the very strong resistance that we have all across this area, both from a monthly and weekly perspective. Going down on the daily, what do we see? Now on the daily time frame, price action is quite clean. Now we had spoken about Euro CHF a lot of times in the past. We spoke about it after this impulse and correction. I made a full breakdown explaining all the reasons for which from here we wanted to see the market create a nice move to the upside, and that is exactly what the market did. Then I spoke about Euro CHF after this overextended W formation, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create a nice move to the downside, and again, that is exactly what the market did. Then I spoke about Euro CHF after this W formation, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside to complete the pattern at the neckline. And again, that is exactly what the market did. Then I spoke about Euro CHF after this impulse to the downside, and I explained all the reasons for which we wanted to see a retracement exactly to the supply that was given by this green candle here before the continuation to the downside. And again, that is exactly what the market did. And with the very last analysis, I explained all the reasons for which after this impulse and correction to this previous support to resistance, we wanted to see the continuation to the downside for the creation of a lower low. And again, that is exactly what the market did with this move to the downside and creation of a lower low before creating this massive move to the upside. And by the way, I will link in description all this previous analysis. So you find everything linked in description so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a training opportunity in next video. But at the moment, what is the situation and how we can be looking to capitalize on the next move for this pair? Now, what we can see is that in creating this move to the upside from a daily perspective, the market has also created this overextended W formation. Now, in general, after an overextended W formation, what you want to see is the market create a move to the downside to test at least the 0.32 of the Fibonacci taken on the daily impulse. In this case, since the time frame on which we have this overextended W formation is actually the daily time frame. So what we do expect from here is for the market to give us a retracement to the 0.32 of the Fibonacci taken on this daily impulse. So what we want to see is the market reach at least this zone here, but potentially even going lower. Why potentially even going lower? Because if you look closely, you can see that the last structure that the market has created is at this area here. Resistance, resistance, and resistance. And this resistance is now on support. And usually what the market does is it retraces to the Fibonacci level, which is aligning the best with structure. And in this case, it is the 50%. So we expect a retracement at least to the 0.32, but possibly even all the way down to the 50%. Now, one thing that we have to notice is that at the moment, finally, the market is starting to show some deceleration at the top in the form of a double top. In fact, the market had found resistance here, and currently it is finding again resistance here. So we have the possibility to create this double top and make a move to the downside. So how we will be approaching this kind of situation with students. Now, before I show you this, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. So the biggest speculators in the market and the smart money that is actually moving the market. Now, let's start from the euro. Now, on the euro, what we can see. Now, in the long term, we can see that we went from having minus 114K net positions with 271K shorts and 157K longs. So we went from having way more shorts than longs, all the way up, increasing and increasing and increasing, all the way to having way more longs than shorts. So the completely opposite situation with 211K net positions and 262K longs and only 50K shorts. So massive longs added on the euro. In fact, euro pairs have been exploding to the upside because the smart money was aggressively buying them. And now what we can see in the short term is a lot of profit taking on all the longs that were added. In fact, what we can see is first 11K longs getting closed, another 2K, another 17K, another 5K longs getting closed, another 10K longs getting closed. And with the very last reports, we can see with the last three reports, again, tens of thousands of longs getting closed. 12.4K, another 9.2K, and another 5.8K longs getting closed. So what we can see is clearly that the long exposure went decreasing from having 37.2% long exposure to having 31.7% long exposure, and the short exposure actually went increasing from the 7.1% that we had here all the way up to 10.5%. with now 202K longs and 67K shorts. So shorts increased from 50 to 67K and longs got decreased from 266K to 202K. So basically 64K longs got closed from some profit taking from an institutional perspective, which makes the euro quite weak. And if we go and see what we have from a CHF perspective, what we can see is exactly what we would like. In fact, we see that more longs have been added with the last report. 628 longs got added and 341 shorts got closed on the CHF from an institutional perspective, making net positions again increase to 15.8K with 21.4K longs and 5.5K shorts from an institutional perspective. So way more longs than shorts, which is exactly what we would like to see in this kind of situation. Why? Because in order for Euro CHF to actually make this move to the downside, we need a weak Euro and a strong CHF. So seeing hedge funds adding longs on the CHF is very good for the overall setup. Now, how we will be approaching this kind of situation with students? Now, as usual, we will be reactive and not predictive. What does it mean? Now, the monthly, weekly, and daily timeframes combined with the COT data that we have just seen are the best timeframes for the direction of the market. But the best timeframe for confirmations and entries is the 4 hours. So what we will be doing with students is inside of this area here, we will be monitoring price action from a 4-hour perspective. And if we go down on the 4 hours, what we can see is that at the moment, everything is bullish. The market has been simply maintaining its bullish state with quite strong bullish momentum, bullish structure. And if everything will remain like this, the market will easily continue to the upside and create a higher high. And at that point, we will simply have to adapt to the new daily structure. However, if we will see the market shift from a 4-hour bullish market to a 4-hour bearish market inside of this area, then at that point, that will be very interesting for us, because at that point, all time frames are aligning and showing the same direction. So with students inside of this area, we will be monitoring price action from a 4-hour perspective, and we will be waiting for the market to shift from a 4-hour bullish market to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will add Euro CHF to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the market to retrace at least to the 0.32 of the Fibonacci taken on this impulse. However, we have to wait for the 4-hour to shift, because at the moment everything is still bullish, and if everything will remain like this, the market will easily continue to the upside, and at that point, as traders, we will simply adapt to the new market structure. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.